Good afternoon, traders and investors. Will back here with another one, coming to a Monday market recap. Hope all of you had a very nice long weekend and are ready to attack the markets this week. And in today's markets, as a matter of fact, we got some very good data over the course of the morning. Number one, we got some ISM manufacturing data that came in less worse than anticipated, a fairly well-needed result. And as well, we got some Black Friday sales data, which showed record sales. So is the consumer actually starting to come back, digging themselves out of the hole that inflation and interest rates have left them in the last 1.5 years? We'll take a look at that very shortly. All of that positivity has led to the markets coming significantly up today, especially in the form of the QQQs. Technology getting a very nice needed boost, and one of the sleeping sectors that has not been alive over the past 3 months finally came back alive today. And of course, I'm talking about semiconductors. So in today's video, guys, we're going to take a look at a few things, go over the ISM manufacturing data very briefly. Number two, take a look at the Black Friday sales data, see how the consumer is shaping up leading into the holiday season. And then, of course, we're going to get into the fun stuff, which is the technical analysis rundown of our major stock market indexes, followed by our big tech names, of course, see if there's any good deals to be had there. Take a look at a few of the hype trades that happened today as well, such as SMCI coming up about 30% on the day after some good news there. And lastly, take a look at my portfolio for a few of the trades made today and what I retain remaining throughout the week. So a lot to cover today, guys. Let's jump right into the action. SPY up a nice 0.18%. The QQQ's up a nice 1.09%. This went as high as about 1.3% at the peak of the day, but ending the day fairly well. Now, when we take a look at the heat map, you will see that although the gains were very nice, they were not all that broad-based. Most of the concentration was big tech and semiconductors. Now, this is in contrast to a few days last week where it was really everything else rallying and these names all left behind. Now we have a little bit of a shift, the rotation coming back into here and out of some of the more defensive sectors such as financials, healthcare, and the bottom half of the market as well. So all in all, very healthy rotation, guys. Always keep an eye on the rotation. I've been talking about this for a while, the rotation between QQQ, XLF, and XLV, and we'll get into more in that. We'll get more into that in just a few short moments. Now, moving into the one-day relative, you can see how mixed the market actually was. Top heavy, though, most of big tech, communication services, technology, and consumer cyclical with that Black Friday data. A lot of retail names doing well today. To the downside, you pretty much had everything else, led to the downside by utilities, real estate, which initially came down because there was a slight spike in yields overnight, but then the yield spike kind of vanished throughout the day, but these sectors did not recover nevertheless. 1 week relative, guys, we remain fairly poised for more gains into the month of December. Everything looking pretty good. Energy, your biggest loss leader right there, and utilities as well. So before we get into more technical analysis, guys, let us jump right into the data. And the data this morning was actually quite good. I was saying that this today was going to be one of the most important data points because we had the ISM manufacturing PMI. This is the data report, I'll remind you, that sent us tumbling off a cliff in the early part of the month of August. This was the Federal Reserve interest rate decision. This was the ISM report, this was the Federal Reserve interest rate decision. This was the ISM manufacturing candle. This was the non-farm payrolls candle. And then the unwinding of the Japanese carry trade, resulting in Black Monday, number 2 over the course of history. So that being said, guys, the manufacturing data came in better than expected, 48.4 versus a consensus of 47.5. Manufacturing still in a contractionary environment right now, but nice to see a little bit of a tick up in that data point rather than further and further worsening. Here's the slight move higher to 48.4. You can see that we are still pretty much in a contractionary environment, but nice to see that we are not getting absolutely worse. So the positive data was pretty much there. I'll remind you throughout the rest of the week, guys, we do have very, very important jobs data points. This is going to be tomorrow, measured by the JOLTS jobs openings report, 10 a.m. Eastern Standard Time. So keep your eye on this one and how it impacts the markets. Thereafter, on Wednesday, we get the ADP employment change, also known as your private payrolls. That will also be very noteworthy because, as you can see, the previous month was at 233,000, and we're supposed to come in well under that at 150K. Any significant declines in this will be met with a bit of red in the market's 100% certainty. And thereafter, on the Friday, we have the big one, guys, non-farm payrolls, and your unemployment rate. This as well, a big market mover. Expectation for 195K. If we come in severely under the expectation, you guys know the drill, could be a volatility-inducing event that could lead the markets into a little bit of red. So this week, guys, the way I'm playing it is I'm being very picky, right? I am not chasing stocks because we have a lot of very important macroeconomic points. These are the points of contention for the recession catalyst narrative. I will remind you, it is all about jobs and economic output. If you get weak jobs data or weak economic output, it kind of puts a dent in the bull market right now and gives a point to the bears for the possible soft landing or hard landing recession scenarios into 2025. So we're going to be very cautious in terms of our positioning this week. We are going to wait for the market to come to us, not chasing stocks to the upside, but waiting for good deals. And although I did make some trades today, I still have a ton of buying power, because if ever we get a negative news catalyst, I will have a ton of money to go shopping for my favorite companies if they come into the zones that I want them to. So that's the news, catalyst for today. A little bit of recap there. Now, in terms of the Black Friday numbers, this is what really helped the markets early on in the day. Black Friday online sales approached $11 billion, up 10%, as in-store traffic falls 8%. So there's your secular trend once again. And as the population gets older, pretty much, the population that traditionally shops at stores, and you get more money coming from Gen Z, the flippening is going to continue. This is a secular trend, guys. It will not go away. This is a long-term trend where people will be buying more online than actually in store. Let's get into the article. Adobe Analytics and Salesforce Analytics, which track online sales, showed big jumps in e-commerce spending on Black Friday. Adobe Analytics reported $10.8 billion in U.S. online sales on Black Friday, up 10.2% over last year. That is the record amount of Black Friday spending clocked by Adobe Analytics since it began tracking online sales. Smashing the records, guys, but you don't need to hear it from here. Amazon Prime Day just a few short months ago also reiterated that it was their best Amazon Prime of all time. So the consumer still remains resilient, but once again, they're very picky on what they're spending their money on. And if this shows you anything, is that if there are deals to be had, they are willing to spend their money, such as on events like Amazon Prime Day or on Black Friday and Cyber Monday as well. Crossing the 10 billion mark is a big e-commerce milestone for Black Friday, for a day that in the past was anchored towards in-store shopping. So very clear statement, Black Friday store visits were down 8%. But I want the takeaway from this article right here is the fact that year over year, guys, the sales numbers are increasing. That does not show a weakening consumer, to say the least. If anything, it shows a very picky consumer, and this is quite good, especially when the consumer doesn't have that much money. The last thing that you want to see is for them to load up everything on credit cards, not care about prices. Now, I did a video last Thursday addressing the credit card issue faced by consumers and how there is a quote-unquote record level of consumer debt. Well, you got to look deeper into the numbers, guys. That's just because there are more people using credit cards. If you take a look at analytics from MasterCard, Visa, and American Express as well, you will realize very quickly that the past 30-day due, in terms of percentage of their clients, is lower than prior to the pandemic. The amount of money that the credit cards are setting aside for loss reserves is also in line or under from before the pandemic. So we do not see an expansion in utilization of credit per consumer. It's just that more consumers now have credit cards in the last 4 years, because what COVID did, if anything, is accelerate the pace of online shopping. And articles like these just go to show that that indeed is a secular trend that will continue in the future. So I'm not going to give it to the bulls just yet. The consumer is still on a very tight rope right now, but seem to be balancing as best as they can. So nice to see, once again, reiterating the fact that the consumer still has money, but still a little bit picky. So once again, we also have to be a little bit discreet, as the consumer is, with our stock purchases, and not just throw money anywhere at the market, but also, be a little bit selective in our positioning too. So that's pretty much everything we had for the news articles, guys. Now let's jump into the fun stuff, which is going to be the technical analysis rundown. So we'll go through these quickly, guys, because not much has changed, right? I know I kind of say that every day, but But it's true. When we're taking a look at the daily and weekly timeframes, there's only so much that you can do, right? Very nice daily uptrend right now. The bulls are in full control. Keep in mind, though, we do have a trend line resistance level at about 810, 811. So if you clip into that, could encounter some resistance, and then you'll be looking for the daily higher low. At this point, anything above 584, looking for a daily higher low for nice daily trend continuation. As of right now, no red flags at all on the S&P. In terms of the weekly as well, weekly is looking very, very, very strong right now. Gorgeous weekly uptrend in motion. And even if we do lose the daily uptrend for some which reason, daily downtrend, just going to be looking for a weekly higher low. At this point, anything above these guys right here, 584, just looking for a weekly higher low for further trend continuation. So no major red flags in the indexes. If anything, guys, because of the strong November monthly close, at most, what I'd be looking for in the month of December, because of the strong momentum close, we are expecting most likely some follow through in the month of December. Keep in mind, December seasonality is usually very positive for the markets and can oftentimes be the best month of the entire year. If I'm expecting any pullback, it's early December, and I do believe it'll result in a little bit of a tail candle like this. If we get a pullback, most likely you're going to get the Santa Claus rally thereafter, unless we get truly bad data or the Federal Reserve is not nice to us over the coming next week. Well, at that point in time, that is when you could get the declines. But if everything goes well as planned, you could end up with a tail like this, a little bit of a retracement down early December and then blast higher to end the month. So that is kind of how I'm positioning a little bit of softness early December off this crazy bullish close, kind of a double trap by Wall Street, if you may, or if I may rather. Trap to the downside, get everybody nervous, and then just run away with their money, which is kind of what I'm thinking that the positioning could be in effect for the month of December. Moving into the QQQs right now, all of that just speculation, of course, guys. I don't have a crystal ball, but if I had to take a educated gamble on it, let's say, that's the type of move that I might be expecting in the markets. Now, moving on to the Qs, beautiful daily uptrend. Finally, the Qs establishing a new daily uptrend, looking very good, making a run for the all-time highs, not clipping into them yet, but looking fairly good. So in the event we cannot break it and pull back a little bit, at this point, anything above 502, looking for a daily higher low for possible further trend continuation. The weekly is looking fine as well. No secrets there. Weekly is in a very gorgeous uptrend right now. Weekly higher low is set and looking for the continuation of the trend expansion. Same concept on the monthly. Very strong monthly candle close for the month of November. And let me just remove this. Very nice close for the month of November. And if we do get any form of pullback, I think it's going to be early in the month, give you a little tail like this, and then possibly end with a very strong candle close. The Qs are looking very good. Monthly starting to get a little bit overbought, but we know sometimes when the Qs go on these rallies, they can stay overbought for a very long time. So I wouldn't be too nervous about just entering into overbought conditions with that historical knowledge in mind. So Qs looking very good. They were definitely the outperformer of the day, and they were helped by their close little buddy, SMH, that we'll get into in just a few short minutes. Financials. So the reason financials is down today, guys, 1%, simply because they were carrying the entire market for a very long time since the election, right? Carrying the entire market, guys. Financials was your lead bull. Take a look at healthcare. What was healthcare doing since the election, guys? Virtually only down until the last week and a half of trading. What was SMH doing since the election, guys? Only virtually down. And what were the Qs doing for a very long time since the election, right? Here is the election rally. Basically flat. The only powerhouse, your lead bull, was financials. They were carrying the entire weight of the SPY on their shoulders. Not much cooperation from the other sectors, right? And now they're taking a well-deserved breather. And while they do take a well-deserved breather, you need to see the rotation. So financials is coming down a little bit, but now we have the upswing on QQQ, we have the upswing in SMH, and we also have the continued favorable momentum in healthcare as well. So financials, perfect opportunity for them to take a little bit off the top right there as we are in overbought conditions. And we know financials is not like the QQQs. It does not like staying in overbought conditions for that long before pulling back a little bit. So keeping all that in mind, daily uptrend is very nice right now, looking for a daily higher low. At this point, anything above 49.30, looking for the daily higher low for possible further trend continuation. Keep an eye on these guys right there. That's going to be your prior resistance, current support, midway kind of between the 12 EMA and the 26. So we'll see how far they pull back. Even if they give this entire move up, guys, and go into daily consolidation, what are we looking for here? You'd just be looking for a very casual weekly higher low. At this point, anything above 46, just looking for that weekly higher low for further trend continuation. So if financial takes a few weeks off into the end of the year, guys, probably not the end of the world. They are fairly extended away from this 12 EMA on the weekly, and you can see whenever they get a bit too extended from the 12, sometimes they can just curl back and pull into it for a nice little retest before putting in a new leg. Financials should continue to be very strong leading into the rate cut cycle, and still one of my favorite plays. It's just that a lot of these companies in financials have ran an absolute ton in the last 4 weeks roughly since the election. Moving into healthcare right now. Healthcare not looking too bad, guys. It's all about the size of the bounce, right? Why? Because we know that we were in the context of a big weekly downtrend. So the bears have the higher time frames right here. They had the monthly consolidation phase, which was led by the weekly downtrend, of course. So now it's up to the bulls to start reversing this weekly downtrend into a weekly uptrend. How do you do that? Well, it all comes down to the daily chart. Look at this big move down. Now we have a very sizable bounce. So we always use the Fibonacci's here to gauge the bull's ability to possibly recapture the daily uptrend. If you have a short-term bounce and you only get up to about 38.2 before reversing down, well, the bulls didn't really do that good of a job of bouncing, right? It shows that the bears are still too strong, and you have a high chance, if you roll over here, of revisiting the lows or at least flushing the lows as well. Now we have almost a 70% bounce, 618 plus a little bit, almost a 70% retracement size. So it gives the bulls a very high probability of being able to reset into a new daily uptrend. Once the daily uptrend is confirmed, your weekly lows are set, and we look to possibly reset even into a new weekly uptrend after being in a downtrend for so long. So not looking too bad at all. Still a lot of work to be had by the bulls. They need to secure the daily uptrend first. This leg of rally is nice, but it means absolutely nothing if it's just a lower high and then into lower low flush. You need to see a confirmed daily uptrend to know that your weekly bulls are wanting to fight and reclaim the trend. So that being said, there are a few names in healthcare that I'm looking at right now, but nothing that really stands out to me other than that NVO that I'm currently in right now. NVO is kind of like the NVIDIA of the healthcare sector, just in terms of how fast it can move. So if healthcare starts to regain some favor here into the end of the year, I do think that this one could be a quick mover to the upside back to about 120, which is why I position with a few call options. Well, actually one call option, kind of all the way down here. So not looking too bad on those right now, but we'll see. The bulls still with a lot of work to do. Moving on to SMH. So SMH finally coming alive. They had the daily down, though the bears had the daily downtrend in motion, and now we get the engulfing move. Looking very good. What does that do? It creates a lot of space off the lows, 234, to set up for almost the exact same thing we saw in healthcare, but one time frame lower. We're looking to reclaim the daily uptrend. The only thing against us right now is this overhead above resistance level, 248 to about 260, let's call it 10-12 point range above us, has been a challenging location for the bulls throughout the period of fall. And you can also see it has been an area of congestion for this market a few different times alike. So step number one is reclaiming the daily uptrend. Nice move here. Keep in mind, the SMH did all of this without NVIDIA. NVIDIA didn't do anything today, but the rest of the SMH was doing fairly good. So a team winning a game without their star player. Star player was on the bench, right? So looking not too bad for semiconductors. We were expecting a nice bounce. Nice to see some follow through, but a lot of work left for the bulls, guys. Need to get the daily uptrend, and then to reclaim the weekly uptrend, you need to close a weekly candle above 260. Only then will we know that the bulls are ready to break out from these highs and start challenging the all-time highs. But until I see a clear weekly candle close above this level, we can still derive that we may just be due for more sideways consolidation, trapped between the 10-point support range below us and trapped between the 10-point support resistance range, rather, above us. Moving into IWM Russell right now. So the Russell not looking too bad, just more sideways consolidation. Keep in mind, guys, the markup of the Russell, right? So here you go. IWM sector weighting. So just so you guys understand why the Russell wasn't moving today, because I think a lot of people, misconceive what actually the Russell is comprised of. And on a day like today, where a lot of tech names are rallying, you would expect the Russell to be rallying as well. Can I actually pull it up here? Well, I don't know where it's taken me here on these websites, but it's definitely not taking me. Okay, well, I'll just read it right here, right? Sector weightings, healthcare, 17%, financials, 17%, industrials, 16%, tech, 14.5%, and consumer cyclical. So obviously on a day, KRE is your small and medium cap banks. on a day like today, guys, where a lot of healthcare names are kind of mixed, on a day where a lot of financial names are mixed and where industrial names are also down, that is why the Russell is not getting a lift, right? So you have to understand the sector weighting behind the Russell, within the Russell rather, to understand why it was flat on a day like today when technology is flying. All of these small cap stocks in the Russell, guys, are not all technology, or else they would have been up. So that is why the Russell has kind of been muted today, but the sector not looking too bad at all, looking constantly for a daily higher low. Daily uptrend is very nice right now, looking for the constant daily higher low, still trying to find it, not found it yet. So even if we consolidate a little bit more, still looking for a higher low, anything above 226 for that higher low to continue the daily uptrend. Weekly is looking fairly good right now too. Nice weekly uptrend in motion. Weekly higher lows are set and looking for the possible trend expansion. Why do we have a bullish leaning bias? Because the bulls control everything. They control the monthly time frame right now. Beautiful blasting through this big 2020 and 2021 resistance level. It's going to be very tough for the bears to get back through that. If anything, we might just back test this resistance area as support before maybe embarking on a next leg higher, but the monthly close leads me to believe that the bulls do want more throughout the month of December. I'm targeting pretty much 250 to 260 as the next leg of expansion over the next maybe 4 to 6 weeks. So we'll see if the Russell can actually put together another 8-10% rally. 5 to 10% would be fair, in my humble opinion. You know, between now and the end of January, could be likely just for this monthly candle continuation. That is why we have a bullish lead on the Russell, because the bulls control the monthly, they control the weekly, and they control the daily as well. And until that changes, we will remain bullish on the Russell. Moving on to the Dow Jones now. Lastly, Dow Jones also kind of wanting to curl over a little bit, but that's perfectly fine. You see, it looks kind of like the Russell, right? Kind of almost similar. Moving on to that. So daily higher lows are going to be sought by the bulls right now. Anything above 42,009, let's call it 43K flat, right? Anything above there looking for a daily higher low for possible further trend continuation. Just take a look at these guys right here, right? This previous resistance range, which is now going to be acting as support. These guys right here I'm talking about now acting as support. The 12 and the 26 EMA are right there. So the bulls do have a little bit of defense down here, but even if we flush through and set up the daily downtrend, is it that big of a deal? No. Who's in control here? Well, it's obviously the weekly bulls. They control all of the weekly time frames. A little bit of a pullback is just going to be that, a little bit of a pullback. And we have a bullish bias as well because of the monthly candle close for the month of November. Very, very, very strong, guys. Beautiful, beautiful monthly uptrend right now. Could be looking for a little more, but even if they're not, so much space to set up monthly higher lows, guys. So the bulls are in complete control of this market right now. And until we see some significant changes in that, that is going to be the positioning that we do have, which is going to be one of being cautiously optimistic. Yes, I am still long, but I also did a 1-hour video last week explaining the narratives and the thesis of the bear market / crash / recession thesis, right? Full 1-hour video dedicated to this. So I understand this thesis, but until the data presents me with hardcore evidence that this thesis is about to play out, I will remain cautiously optimistic in my positioning. Keyword is on cautiously because we acknowledge that this is a very real thesis. It's not just hot air. All of these points do have validity to them. It's just that a lot of these points are now debatable or unclear, right? There's cracks starting to form everywhere, but can you just pave over those cracks as if nothing existed? Or do you have to redo the entire road? As of right now, it seems as though we can just pave over them and we're going to grow out of them. But if the event, the data really starts declining and we see some noticeable trends month over month, right? Then we will have to reevaluate the bull market thesis. But for now, everything's not looking too bad. Now let's move into a little bit of crypto, shall we? So crypto, actually, before we do crypto, let me do the TLT because TLT might just be ready right now, guys. So taking a focus on the monthly timeframes, we always knew that the spike in the 20-year yield since Powell started cutting rates, we knew that this was just temporary, affected by a lot of factors. And now you can see they're trying to set up the monthly lower highs to get that further continuation down because we are in a rate cutting cycle. There was a lot of factors keeping this one a little bit high, mostly due to speculation surrounding inflation, surrounding US levels of debt, etc., etc., etc. There's like 10 different aspects to this trade as to why it was going up. All you need to know now is the bears have now, or I mean, it depends how you look at them, right? The TLT bulls, you know, would be the bears here. But anyways, the yield bears, people shorting yields, right? The weekly uptrend has now been lost. and they are now also losing this previous area that they had claimed as support, now under it ever so slightly, still battling with this trend line. But if we start moving below, that will be a clean break, and you can be expecting some further monthly continuation to the downside on the 20 and on the 10-year yields as well, which means the TLT trade might just be ready right now. This is what we were waiting for. We had the massive daily downtrend. We were waiting for the bulls to show a sign of life, and now they got it, guys. Engulfing move, looking for the daily higher lows, reclaiming all of the short-term moving averages that we have not had. They even got the 50 EMA back. So now looking to set the daily higher lows for possible further trend expansion, possibly also trying to reclaim some form of weekly trend line, and also possibly embarking on the monthly higher low into possibly higher high. So this trade could very well be ready right now, but keep in mind, this is not NVIDIA. It doesn't move like NVIDIA. So if you are positioning on this one, extend your timeline more than the next 30 to 60 days. If you want to see a rally and recapture back of the $98 to $100 level, that's very logical, but it might just take a little bit longer than people anticipate. So I'm going in with call options as well, but my timeline is most likely June to next December, guys. We got to give it some time to cook, right? So that being said, that is for yields and TLT. Now let's move into Bitcoin, shall we? So looking at Bitcoin, not doing too bad today. You know, Bitcoin is pretty much flat all day. Well, actually it was red. We just opened a new hourly candle right now because it must be 7 p.m. Eastern. That being said, we did have a slight decline here on Bitcoin, but nothing really noteworthy, right? We know the bulls are pretty much in control of this chart. Now, yes, they did kind of lose the momentum on the daily, setting up the lower high into lower low, but maybe we just end up in somewhat of a tightening range, right? A lot of support below us here at 91K down about 89. Until that gets challenged or broken, I would not say that weekly consolidation, a large weekly consolidation, is at risk just yet. So that is the zone that I'm monitoring right now. As you can see, very nice weekly uptrend, just cooling down some of the time frames right now. Any movement lower on the weekly, looking for a higher low, anything pretty much above 59,000, guys. I mean, I guess you can arguably use this one right here, 65. The moral of the story is that there's tons of space for the bulls, right? To set up for a weekly higher low for further trend continuation, and the monthly candle close. Look at this monthly candle close. Usually when you have such a bullish monthly candle close, you do get some follow through. Could this be another case of early monthly wick and then into solid close? Very possible, guys. We're kind of expecting a candle like this, right? But at the top type of thing. So a candle like this, just continuation candle, but a little bit of weakness maybe early on in the month. That would not be surprising. In terms of altcoins, kind of the same markup as well, right? In terms of Ethereum, also struggling right here, 3,900, 3,800, big area of 52-week high resistance. No secret there. If you blast through that, well, you're going for the all-time highs, $4,600 on Ethereum, not looking too bad. The altcoins are a mixed bag. Some of them are rallying super hard, like XRP has been rallying super hard. A lot of retail engagement with this one on TikTok, Instagram, and all over the place on Twitter as well. You know, you have some outperformers here and there, but look, I mean, Solana's now in the daily downtrend. That was an outperformer for a long time, carried the market, and now kind of nowhere to be seen. Phantom also with some beautiful trend expansion here. So it's really a mixed bag, depending on what you're in. I mean, Link before today just closed a 33% day to the upside, as a matter of fact. So you do have some outperformance, but I wouldn't say, I mean, it is broad-based in terms of altcoins, but they kind of rotate, right? You know, Link will be up 30% one day, and then the next day it'll be Uniswap's turn. The next day it'll be Solana. The next day it'll be, you know, something else in this list turn, right? So the altcoins are pretty much now in favor. Retail is here in this trade, guys. You see it a lot on TikTok and everything like that, and people are bringing back what they call the dino coins, the dinosaur coins of the 2021 rally. All of these so-called utility coins that in all reality didn't have that much utility because when the bear market started, nobody cared about them anymore. And now they're all coming back to life. So could be interesting to watch. And Bitcoin dominance, this is a clear break, guys. This is what lets you know. I was talking about this for the last 2 weeks. If you want to know when altcoin season is here, watch this dominance chart. And now Bitcoin dominance is coming down. This is how much of a percentage of total market cap in crypto is Bitcoin. A little bit like how much weight in the S&P Microsoft has. This is the same chart for Bitcoin. Bitcoin dominance down from 60% of total market cap of crypto down to about 55. But the one clean thing you want to see here, this is a notable shift, guys. We have not had this since 2023. Big break to the downside here on the weekly and challenging the 50 EMA on the weekly. This can possibly result in a lower high, lower low weekly downtrend. It does not mean that Bitcoin has to go down. It just means that Bitcoin is either going to be flat or moving up slower than the rest of all the altcoins. The altcoin gains will outpace those of Bitcoin. That has not been the case for the entire year and a half so far, and now might just be materializing. So keep that in mind. Altcoin rally is now just beginning, guys. Last maybe 2 weeks, week and a half. So we are still very early. Despite the fact that a lot of these coins have ran, we are still, technically speaking, early in the grand scheme of a rotation. Of course, not financial advice. Crypto is risky. And I know I am not going to tell you guys which coins to buy. You guys can do that research on your own, because none of this stuff has any value whatsoever, guys. You know, other than VCs backing up the price and retail interest in these coins, none of anything has value here. So whichever one is your favorite, focus on the narratives. Which one is getting the most mind share? Which one has the most attention at the moment? And keep in mind, in crypto, sometimes attention narratives shift very, very, very quickly. So build yourself a little watch list of all the popular coins that you come across on Twitter or on TikTok and watch the rotations between them. Now, moving on to big tech names, right? So big tech names looking pretty good today, guys. Everything pretty much in the green in this entire list. And give me a very brief moment. Thank you very much. Appreciate that. So moving into Apple up 1%, eclipsing a new all-time high for Apple right now. You know, a lot of people said it couldn't be done. I wasn't saying couldn't be done. I was just saying there wasn't much risk to reward to be had, you know, bidding Apple up here for the breakout continuation. But they did have it, as a matter of fact, looking not too bad on Apple right now. So this is going to unlock one of two trades. We have the daily uptrend. We have broken through the new all-time highs. What I would like to see here to open up a trade is push a little bit further here, give me daily overbought conditions, and then give me the breakout, the retest trade, and then run. I might be a fan of bidding this retest, but I wouldn't do it in the way that most people anticipate. I would be doing the breakout. If we come back here for a retest, I'll be sitting here for some short put options in the event Apple pulls back more than expected, right? So breakout, retest, and run trade possible on Apple. Why do we have that bias, guys? Well, because the bulls control the weekly timeframes right now. It's clear as day, weekly uptrend expansion, and they also control the monthly timeframe as well. 2-3 months of consolidation at the tops right here, consolidation range, looking like they want to push a monthly candle higher. So that is why we have a bullish lean for the break, retest, and possibly run trade. Could be a very decent swing trade idea. Apple looking very good. You know, not the best position to be adding some long-term shares, just because the valuation right now is very, very high, and it has been high this entire time, guys. I'm holding all my Apple shares, but I'm not in a rush to add more, in other words, and I'm definitely not selling any. Too strong of a company. Moving into AMD right now, finally getting a little bit of love, 3.57% to the upside, and we were keeping an eye on this big daily downtrend on AMD, which the bulls have been trying to desperately reverse in the last few days. Well, now they have an engulfing move with the most recent down leg, engulfing move. Can they fully V-shape this and get the new daily uptrend? We are reacting very nicely from the support range down here, 142 down to 128, but the job is not done, guys. Need to get the daily uptrend. That is step number one. Step number two is starting to retrace as much of this weekly downside momentum as possible, because the bulls lost all the juice, right? The bears took it all back. Now what we need to do is either the unlikely V-shape scenario or the more likely two-stage recovery process, where we may just rally from here, get stopped out either at the moving averages, 150-ish, or the higher end of this resistance band, which has been problematic for the bulls quite a few times over the course of this year, which is 155, 160. Pounce up into here, maybe give a little bit of a weekly reset, and then go for the weekly trend expansion. That would be a likely scenario in my mind. Still a decent opportunity to be bidding some AMD stock, which is what I've been saying for the past 2-3 weeks at this point. Decent area to bid if you believe in the fundamental thesis of the company, it being at a very, very attractive price right now, and also the fact that they will be ramping. Look at this EPS ramp, 25 and onwards. This is the AMD thesis, guys. This is their data center ramp, and as of right now, for this ramp, the company is priced extremely attractively. So take from that what you will. Decent area to start bidding. I've already started bidding a little bit, but wouldn't be opposed to bidding a little bit more. Moving into Amazon right now. Very nice day on Amazon, 1.36%. I assume because most of that coming from the Black Friday sales data. No sales data from Amazon, but that could come out in the next few days and could contribute to this stock heading a lot higher. They're going to conclude their period, of course, today. You know, they have Cyber Monday and a few deals remaining this week. So maybe we get the data later on in the week from Amazon, or maybe beginning next week as well. Should have a very solid period though for Amazon. Daily uptrend. Well, I mean, you can't really argue it's a daily uptrend right now. This is just this was a daily downtrend, one big daily engulfing move right now. So if the bulls do choose take a little bit of a breather, looking for a daily higher low for continuation of the daily uptrend. Anything above 196, just looking for the new daily uptrend to be in motion. Why do we have that bias, guys? Because the bulls control everything right now. They control the weekly time frame, clear as day, weekly uptrend, higher lows are set, looking for the expansion. Even if we pull back, they can develop into somewhat of a tightening range at the top, and they would still look very healthy. Something exactly to what they did right here after this glorious rally, just kind of consolidated before pushing a little bit higher. And this was end of July and August, of course, but now not looking too bad. And also on the monthly, guys, look at this candle close on Amazon, closing well above monthly uptrend. Has never been a question. They control the monthly uptrend. Sideways consolidation for 5, 6, 7 months above previous all-time high resistance, guys. This is accumulation phase 101. Accumulation, and now they go for the distribution phase, right? So not looking too bad, looking very good. A lot of demand for Amazon stock, and I'll remind you, the technicals are looking very good. The fundamentals are looking even better. Look at all the analyst price targets. Everybody buying, and look at the median average point, 235. I listened to this one guy has a price target of 180. I listened to his thesis, and honestly, it was pretty bad. So take from that what you will. Medium average point right now is about 235 to the upside, looking very strong on Amazon. A lot of focus on EPS, profit margin expansion, free cash flow expansion, something Amazon has not done before. So watch out for this one in 2025. I've been saying this for a while. I've been saying this for 2-3 quarters now. I think Amazon's going to surprise everybody over the next 12 to 18 months. Moving on to Google right now, 1.46% to the upside. Google not looking too bad at all, but still a lot of work to be had by the Google bulls right now. Let me just check one thing. Yeah, they did lose the hourly uptrend. Okay, so the daily higher lows are set right now. We had a big daily downtrend, and now the bulls, it was all on them. Can they reset into a daily uptrend and start reclaiming a little bit of this lost weekly momentum, right? Weekly is very nice. It is still a weekly uptrend right now. The higher lows are now set at 166.31. So looking to push through this area of resistance, which stops at 176. Then you got these guys, overhead resistance at 180. A little bit of a challenging area for Google coming up shortly, but the bulls can possibly make quick work of this if we continue on this bullish momentum in big tech throughout the month of December. So not looking too bad, but in the event we roll all of this over, guys, and tumble below, you guys know me, I'll be sitting right here. As always, as I've been sitting there for the past 2-3 months, I'll be sitting there with my short put options, with my call options for more Google, because this is one of the cheapest stocks in all of the Magnificent Seven right now. Of course, because of the Department of Justice headlines. They have very strong net margins. They have extremely strong EPS growth forecasts. Right? EPS growth forecast is beautiful. Revenue growth forecast is beautiful. Balance sheet for Google is never a problem. And the average analyst price target is about 210. My price target as well is about 210, 220. So a lot of possible upside in this one, especially if we can get through a little bit of that headline risk. If you ask me the probabilities of the DOJ breaking up this company, I would say probably under 3%. I could be wrong, but I don't think it's very likely that they break up the company. Can they have some restrictions and some other requirements? Yes, but breaking up the company, the reason for, all of this massive decline, all of these negative headlines, is really the breakup risk, right? That is causing most of the issue. And I don't think that's the case. And when we do get a ruling on that come next May, because the judge has until May, June next year. So I don't think we're going to get a ruling soon. But when that comes and when less fear is around Google stock, I think this one is going to reprice to the upside quite quickly, as it is a very good deal right now. Moving on to Meta. Meta having a fantastic day today, up about, we're at 3.22%, not looking too bad on Meta at all. And this was kind of always the case, right? Daily uptrend was clear as day. We were looking for the bulls to just expand, and now they have. So even if we choke out here at the previous all-time highs, a lot of space right now. Anything above 550, looking for a daily higher low for possible further trend continuation and a second attempt at these all-time high areas. Looking very good, back above the moving averages. On the weekly, we were in a consolidation phase and a weekly downtrend. The reason why I was not nervous at all is just look at the monthly, guys. Who's in control of this chart right now? Should be clear as day, right? So when you go into weekly downtrend, you have to look one time frame higher. What are the bulls looking to do? They're looking to set up the monthly higher lows for possible further trend continuation, and we did not even make it back to the retest zone. I was looking for the good old breakout, retest, and run. Didn't even make it there before the bulls kind of got the afterburners on and now trying to reclaim the all-time highs. So looking very good on Meta right now. Unfortunately, the trade for me was down here, got a little too greedy. Well, it's not even a question of me getting too greedy. It's just respecting my rules, right? When I have a defined level that I want to go shopping at, I want it to come into that level. Now, arguably we were only off by about $10-15, not the end of the world. So I could have done a little bit of a position there, but I was being extra patient, playing other companies in the meantime. And if it didn't fill me, if it didn't come down here and fill me, it didn't come down there and fill me, guys. What do you want? That's the nature of the game. I've been playing tons of other stocks in the interim, so I'm not disappointed about missing Meta. I have a ton of shares in my long-term portfolio, so that is perfectly fine. Moving on to Microsoft right now. Microsoft up 1.78%, and I don't want to speak too soon because Microsoft does this sometimes, right? Just a few times to where they challenge this area. Just a few times, right? Where they challenge this area and they just don't get through. So I'm not going to say anything, right? Microsoft bulls moving well, right? Got the daily uptrend going back again. Overhead resistance stops at 435. And if you really want the trend breakout, you need to close a weekly candle above this whole 435 level. We have not closed, other than this rally up here, of course, every single time, right, prior to that rally. And since that rally, it's been a very tough area to close above 435. So if you want to see that trend continuation, need to close a candle above 435, reclaim this area, possibly back test it as support, build that support shelf, and then launch. That would be a very nice setup for Microsoft. I've been positioning at the lows already, guys, but even now, Microsoft, not that bad of a deal. In the event we get rejected, guys, and come back into consolidation, you guys know the drill. Pretty much anything above all the way down here, 405, it's just going to be sideways consolidation trapped between these two levels. And I do think that if we come down lower towards this area right here, I will continue to bid because I do think it's a very attractive buying opportunity for Microsoft down there. Even despite their valuation being a little bit high, the valuation of Microsoft is always high. The one thing that is pleasant right now is that they've been consolidating sideways for a grand majority of the year. Weekly MACD is about to cross, and they've been improving their fundamentals ever since. So very nice accumulation phase. When this one breaks, it's probably going to get a lot of continuation after such a long accumulation phase. Moving on to Netflix right now. Nothing wrong with Netflix either. 1.23% to the upside. So 1 day of pullback apparently is all the bulls wanted, because now they're looking to break the all-time highs again. Looking very strong, hesitating a little bit at the $900 psychological. If we get rejected a little bit, no problem at all. Even if we get the daily downtrend, no problem at all, guys. So much space on the weekly. Anything above 745, just looking for a weekly higher low for possible further trend continuation. So looking very good. No red flags on this chart at all. Monthly control, weekly control, daily control as well. However, not the best risk reward consideration right now. No clearly defined levels of support on the way up. So very tough for me to just play the pullbacks for some longs. I'd like to get a little bit of weekly consolidation, further weekly consolidation, establish somewhat of a shelf of support, similar to the way they established it back here. Back testing it, that's a great long. The breakout, retest, and run. But here, just playing continuation into weekly RSIs of 80, not my style of trade myself personally, but I'm not selling any of my long-term shares, to say the least. Now, moving into NVIDIA. So the star player of semiconductors being left on the bench today, possibly just still resting from the earnings injuries, right? I mean, there was no injuries on earnings. The earnings were absolutely fantastic. We covered them on the channel just a few short weeks ago at this point, right? So daily downtrend is still in motion right now. What are the bulls trying to do? Trying to get the bounce underway. But as of right now, the bounce is fairly weak. Put the fibs on this, right? If you lose even the highs as the fibs, right? Only a 38.2 bounce. You want to really see the bulls come alive, need to at least bounce all the way into the low 140s. Give me a 142, 143, 144 bounce. Now we're talking decently juicy size bounce, create some space off the lows to recapture the daily uptrend, or just go for the V shape. That's fine as well, but most likely going for the two-step recovery process. And even if we don't, if we continue this daily downtrend decline here, guys, and continue this weekly decline as well, you'd just be looking essentially for a weekly higher low for possible further trend continuation, and you'd be fulfilling one of my favorite trades, right? This is the prior all-time high resistance. This is the breakout, this is the retest, and that could possibly be the run. So I will be sitting here with a few contracts for NVIDIA, and even if we break down lower into this very juicy support zone, 120 to 115, I will be buying there as well, because we control the monthly timeframes, and any significant monthly pullback is just that, looking for a monthly higher low for further trend continuation. So whether we stop here at the 130 or the 120, doesn't matter. I'm probably still buying because the fundamentals of this company are not going anywhere. Demand is still very, very strong for them. Moving into Tesla now, before last, Tesla up 3.46%. Not a bad day for good old Tesla right here, right? Nice daily move higher with the gap up. So confusing area of price action. So let's break it down. we have the daily uptrend. We wanted continuation, didn't get it, and now we got the follow through a little bit, right? So we are possibly looking for the follow through. Keep in mind the follow through will be taking us right into the previous all-time highs, talking about 375 up to about 410. I know it's a very wide range, but that's because we have very wide candle formations up here, but that is the resistance zone culminating in the 400 psychological level. Seems like just yesterday, Tesla was half of that at 200, and now we somehow find ourselves at the double 400. Now, a lot of this is a result of the election, of course, but still, regardless of the reasons behind the trade, the price action is clear as day. Very nice weekly uptrend right now. Right? So the bulls at any point in time, even if you give back all of this daily move and go daily downtrend from here, looking for a weekly higher low for possible further trend continuation. And I will be sitting there, guys. If we pull back into this zone of support, 310 out of 300, I will be sitting here with some short put options. Well, not there, but if the market comes back there, I'll probably be sitting a little bit lower here, 280, 275. Milk that premium for all it's worth for a possible new leg of weekly expansion. Monthly candle close on Tesla, guys. I mean, clear as day, right? New monthly uptrend by the bulls. This is the first monthly uptrend since all the way back here, early 2023. So the bulls are on parade right now, not looking too bad. If anything, we might get a little bit of early monthly pullback in the month of December, maybe before closing a very bullish candle into the end of the year. Now, obviously, a lot of this price action, guys, you know the reason, right? It's all momentum and hype. And because Elon Musk and President Trump are best buddies right now, apparently. So that's one of the reasons. Deregulation around the robotaxi ramp for Tesla, that's going to contribute to possibly faster sales, faster rollout for them. But, you know, none of that justifies the current leap in valuation by about 2x, right? A lot of this is hype and momentum based, but still looking very strong on Tesla. Moving into Palantir right now. So Palantir, the unfortunate recipient of a red day for once on Palantir. So 1% to the downside. No major levels have been lost at all, guys. Very nice daily uptrend right now. Still any point of consolidation, looking for a daily higher low for possible further trend continuation. However, just be mindful, guys, a little bit of bearish divergence right now. So you have higher highs on the market. RSI momentum is pointing lower. MACD appears to wanting to be crossed on the daily. So you might have a little bit of rollover factor on Palantir. If you flush these lows right here, 59.17, you would be undoing the daily uptrend, opening up the door for the bears to take over the daily downtrend. But that would just be very healthy consolidation on the weekly timeframes, guys. It needs to consolidate on the weekly, right? Very overbought right now. I understand as a Palantir shareholder myself, my cost basis is $11.83, guys. So trust me, I want this one to go higher, but eventually things do have to consolidate. And if we do consolidate down here, I will be looking to play some swing trades on Palantir in the mid $50 range. But the last thing I want to do right now is just chase it right here at the highs. I'm happy with the shares that I have. We did a lot of swing trades in it in the past, but kind of stopped the swing trades when we started breaking the 40s. And now into the 60s, guys, it's just a little bit too risky, in my opinion, right? Not the company is risky, but the price action of the stock is risky, right? The risk to reward profile is not the most favorable right now. I think there are better trades in the market, but as a long-term investor in the company myself, there's still no reason for me to be selling my stock. Maybe just covered calls out of the money, if anything, at that point, right? That's pretty much your entire recap for the market. Now let's go over a few names very, very briefly, right? So SMCI having another beautiful day, 29%. We were talking about this one down here, saying it might become a buying opportunity. Why? Because we listened to their earnings, and their earnings are very good. 70 to 80% of the liquid cooling market share right now. Liquid cooling for Blackwell and AMD already, and they've expanded their capacity of production for this liquid cooling by a very large amount. Now, the relationship with NVIDIA is still strong, said by the CEO of SMCI during the earnings call. There was no significant reduction in demand due to the regulatory concerns and the filing delays. So there you go, guys, right? And now is the kicker, right? So they got a new auditor back here. And now what happened to the stock today? Well, you guys probably know this, but for those of you who didn't, well, they jumped after the committee finds no evidence of misconduct, no evidence of accounting fraud in the books, and they recommended hiring a new CFO, possibly for more transparency and more clarity. So SMCI looking very good in the grand scheme of things. Take a look at this on the weekly. Still have not even set the weekly uptrend just yet. So any pullbacks, in my opinion, I am going to be going shopping for some SMCI. Now that we have all the negative catalysts out of the way, I want to play the retracement back up here, maybe into the $50, $60 range. I'd be hard pressed to believe that it might come back to 100. Anything is possible, especially in this market, but we'll be looking for the possible weekly trend recapture. A matter of fact, we did some very nice trades on SMCI the last few weeks, looking good. Enphase is another one of those, right? Solar play came down heavy because of the Donald Trump election factor, essentially, right? Even though people forget that Trump was not all that bad for solar as a whole. Here is the last time Trump got elected. Here was, 2016-ish, and the solar sector actually did quite fine. It's not as if it went to zero when he got elected, although he does have a penchant for oil. So I think a lot of this short-term fear was overblown, left Enphase at a very attractive valuation down here, and now we might just be going for a little bit of weekly recapture. Still a lot of work left to be done by the bulls, of course, but over time, this could provide to be a very nice entry opportunity if you're looking to build a position in there. Companies like Square as well today having a very good day, right? Square up now, breaking above this big area of weekly resistance. First time they've done that. So can you possibly find the breakout, retest, and run? Possibly. My profit target for Square for 2025 is 110 to 120, and we could be coming there. They could do very well, guys. Not only do they have a payment-to-payment transfer system, right? Peer-to-peer transfer system, Cash App, they have something like Affirm built in, which is a buy now, pay later service. Great for that online shopping. And then they also have something like a SoFi where they do banking, trading, and loans. This is a 3-in-1 company. This is why I like this one a lot. So we maybe not have caught SoFi from the bottom, but my call options from down here on this one are doing numbers right now. Speaking of SoFi, SoFi also, it's looking pretty good, right? But a lot of people very interested in buying SoFi here, but I didn't hear from those people when we were buying the stock down here. So SoFi not looking too bad at all right now, but just keep in mind, risk to reward profile, somewhat unfavorable right now. Weekly overbought conditions, monthly, not quite just yet, but I got to give it to them. The monthly candle close was beautiful. So can we get some continuation? Yes, but can we also get a pullback first before continuation? Absolutely, and that's what I'm looking for. If we get more pullback here, hard pullback, let's say, down into maybe the mid-14s, could be looking to write some put options down here, get some premium, or maybe just fire off some shorter term duration trades, because I do think this one will be part of the hype and momentum trades. I mean, the valuation right now, guys, at $15, $16, admittedly, it's a little bit high, right? Down here, it was a joke. It was an easy buy, but up here now that it's 2x, almost 3x from the bottoms, looking a little bit rich. My short-term price target, of course, is about $20 psychological levels. Not looking too bad at all. So if you're in this one, I don't really see a reason to sell right now because it's the everything rally bull market, but that's the case for SoFi right now. Those are just a few of the high-flying stocks today, guys. Trust me, I have a list of like 200 stocks. So I can go through them all, right? But I want to bring up the ones that people are most often talking about over the course of a given day. So not looking too bad at all on that front. ASML also getting finally a little bit of love. This one was in my Saturday video where I was giving you guys 5 high quality, high conviction stocks for a little bit of a recovery rally. A lot of work left to be had by the bulls here before reversing the long-term timeframes, but not looking too bad in the grand scheme of things, guys. So I will be looking to add some positions to ASML right here. New daily uptrend. So can we possibly go shopping for some call options, call debit spreads with a lot of time on them? Yes, because this one will require a lot of time to recover. We do not have the monthly time frame. We also do not have the weekly time frame. We also have just only now recaptured the daily. So a lot of work to be done by the bulls. I'm not expecting a massive V shape like this. It will take some time, so plan for that if you are looking to play this one with some options, because the shares, of course, are a bit expensive. Even though people can do fractional shares, sometimes people don't have the opportunity depending on your broker. So ASML also not looking too bad there. And that's pretty much the highlights of the day. I know there's many, many more, guys, but I'm only going to be covering a few per day, of course. Hopefully you guys understand. Now, in terms of the trades for today, let's go into the trades a little bit. So in terms of the ones that we closed, very nice closes today, guys. So first off, what we did is we went with the Elf Beauty. So Elf Beauty, guys, take a look at this, right? Elf Beauty, we went with when Elf Beauty dipped this morning, and this was also one of my top 5 options plays. You got to hit these a little bit quickly in the morning, RLG. Elf Beauty. So Elf Beauty was down this morning about 6% early on in the day, and we pretty much picked almost the bottoms. I was telling you guys, watch out for the expected move. Came down right into the expected move, and I was saying if that happens, be able to write some put options down here, and that's exactly what I did. You can see right here, we wrote these for 65 cents in the morning, and funny enough, by the end of the day, we were able to close this in one single day. 55% profit intraday on an easy options trade, guys. That's how easy it is sometimes with the wheel. Just define your levels and just buy things when they're red, right? Puts when they're red, essentially. So nice little trade right there. We also fired off some new holdings. We got the 11 puts for 7 cents. This company as well was down on the day. They retraced a little bit here, but we were also to pick this one up, close. We didn't get the bottom of the day, but got a very decent level here. So we got filled on those new holdings. I only went with 2 contracts, leaving myself open to DCA a little bit more in the event it kept falling. I only went with 2 very small contracts here, but we did get the ROI minimums. 11 puts for 7 cents a pop. That is over the 0.5% rule. So I'm quite happy with that one. We also closed the MSTR that we opened 2 trading days ago, guys. 2 trading days ago, we opened this one for $300. 37% margin of safety on those contracts for 1.5 weeks worth of time. Got $300 for them. Closed them off today for $50. $250 in our pocket. Thanks for playing MSTR. So looking very good there. And we also closed these SMCIs that we opened last Friday for 86 cents at the $28 strike. I went a little bit somewhat aggressive with it, I guess. Here's the opening order, 86 cents, 11.29 on the dot at about 12:30 in the afternoon, right before the Friday close. And now we close them for 9 cents. So over 90% profit in just one very quick trading day. So that was a very nice trade as well. And we opened some NVIDIAs today too. 135 strike for 66 cents. NVIDIA wasn't participating too much. I did not get the best pricing of the day, not even close at all, but I did respect my 0.5% rule for that strike. And the reasoning is, even though NVIDIA was not red today, I actually want the shares at 135 because if I get a sign at 135, I'll be looking to hold this into pretty much the 140, 145 range for a little bit of share appreciation. So those are the few trades that we made today. Now let's take a quick overview of the account as well, shall we? So taking a look at the account real quick, guys. So as you can see, not much has changed. I still have all of my calls and call debit spreads. Still the AMD position that we added a little bit to. We're still down on that one, but that's fine. The Amazons, the ASML, this will be one that I will add to. Not the Januaries, though. I'll probably go for March and April with a bit lower strikes on my next call debit spread, but we will wait to see if this one can actually come back. The end-phase contracts are doing well. Today, here's the daily P&L column, so just keep an eye on this one. A lot of the moves were very good. We also added a new position, EVVTY. This has been one that I brought up on the channel a lot, very often, and they had fantastic earnings. We positioned here prior to earnings, sold the top, sold a little bit of the retracement as well. Actually, we sold off the second batch there, reallocated the capital elsewhere, and now once again, EVVTY is presenting us with a legendary opportunity into a very nice area of support. Peg ratio right now at $85 should be close to 1, expanding their expanding EPS and revenue extremely strong, and they have almost a monopoly, guys. If you don't know what Evolution AB does, Evolution AB, they are almost a monopoly for what they do, guys. They do, if you guys have ever seen online dealers, like the online poker dealers and blackjack dealers, like this guy right here, right? If you guys haven't, they don't want to make it bigger. Like this guy right here, that is all Evolution AB, guys. If you are online gambling at MGM Grand or Caesars or whatever, all of the casinos, or not all of them, but mostly all of them, they all use EVVTY, Evolution AB. It's basically a middleman, right? They provide all the services. They provide online slot machine services and so many other things. Take a look. They have net margins equivalent to Visa and MasterCard. 50+% net margins. Buybacks are coming in this quarter as well. I think this company is mispriced, guys. It's very cheap right now. And the growth, I mean, take a look at the price targets right here. The growth is there, guys, expanding EPS and expanding revenue as well. With these net margins and that amount of free cash flow, I'm a buyer down here. So that's why we added a little bit of shares. Left myself some room to DCA in the event we come down a little bit lower though. But that's a new position that we play sometimes with shares. It's over the counter, so there's no options on this one. I would love to have options on this one. I guess you can do them on the Sweden exchange, but then again, I just stayed with the American ticker OTC, so a little bit of a 20 share position there. Everything else is pretty much the same. You can see a lot of trades are moving well. Microsoft is moving well now again. Here's the new holdings. Here's the NVIDIA trades. We still have the NVIDIA longer dated put options. We got them for $4. just last week. They're now about 50% profit right now for the 132s. We'll see if NVIDIA has a rally. We can probably pull forward the rest of this premium, maybe over the course of the next one and a half weeks right there. Not looking too bad. NVO is now also back to almost break even, so not bad there. And we also still have the SOXL contracts, which are also almost back to break even. Square contracts are doing very nicely right now. We closed one last week or the week before, if I'm not mistaken, but the running P&L on the remaining three is very good. And TLT, this is the one that I will be adding to, guys. Probably the June 95s, if anything. I might add a December in there for 2025, but I'm not going to add to the Januaries. They're a little bit too close. We'll see if there's any remaining recapture value, but we're down a lot of money on these. I'm not expecting these to really come back much before January, but if we can get less of a loss on these, that's fine. I'll remind you, we opened these as a hedge for the market pulling back, and we just kind of kept them, right? So that being the case, that is the portfolio rundown. Hopefully you guys enjoyed that. If you did, consider dropping a like. I would really appreciate it for the growth of the channel, and consider subscribing to the channel if you're new here, guys. We do these every Monday through Friday after the close. Thank you so much for the 4,000 subscribers, guys. Next milestone, the good old 5K. Yes, the good old 5K, guys. Started off, I mean, back in April, I still had about 1,000. So now the channel is really starting to grow, and it's all thanks to you guys. So thank you so much for your support, your appreciation. It means the absolute world to me, and I love doing these videos, guys. So if you guys would be so kind, consider subscribing and consider liking. And if you have any questions, as usual, leave them down below in the comments, and I'll get back to you in the next 24 hours. And in the event you guys want to join the Discord and get all of these trades in real time, here's the trade recaps from last week, the weeks prior as well. You can see a lot of wins here because we run a very consistent strategy as a whole, right? So if you want access to all of these swing trades in real time, the short put trades, the wheel trades, shares in call options, leap call options, short-term call options, and everything in between, the link is down below in the description, guys. Code is Friday in all caps, Friday, for 30% off of your first month. So hopefully I can see you in there. Private morning live streams every morning for about 1 to 2 hours, and chat with me all day about your stocks and your options and get my opinion in real time. So thanks for watching, guys. That's everything I had for you, and take care. I'll see you tomorrow after the close. Happy trading and peace.